What's up, guys? So today I want to talk about last week's trade. I made the most amount on my funded account. So if you don't know, I started a challenge for myself. My funded account got all the way down to $90. So the challenge was, can I take this $90 account and scale it all the way back up? So now I need to get the $90 back to 2,000 to be even, and then from 2 to 3 grand to request a payout. Okay. So it might be interesting to you guys because you guys are on a similar journey where you're doing looking for payouts, doing prop firm challenges and stuff like that. My account has been funded already. I'm just getting it out of a hole right now. So you're gonna witness me doing it. Hopefully, I succeed, and you're gonna see kind of the things that I'm going through, so you can compare it with what you're going through in your trading, and hopefully, we can both share and learn from each other. All right. So, without further ado, let me go over the strategy that I'm using for this funded account. I'm using ICC. ICC is kind of a three-step process. Um, just to simplify things. So you've got an indication when the market moves in a direction where it breaks a high like this, that when you see that, that's an indication that the market wants to go higher, but we're waiting for the correction here, right? The correction is it coming back like this. And then right here, this is the point where we're looking for a reversal to happen, somewhere in between here. We're waiting for it to reverse to the upside. Then we get in, we get a nice entry on the 5 or the 15 minute. And then for the continuation, we get in down here and we ride it all the way up, usually to this area right here, to the high that it made when it made the indication. That would be my take profit one. And then I have another take profit two, which is just holding it if it keeps going up. Some things to note, I'm trading futures, so I can only trade during New York session. That's when I'm trading. I can trade during other sessions too, but after New York is over, I have to get out the market. Okay. So looking at the chart right here, this is what we have. Now I'm back in the replay mode, so that way we don't see everything else to the right, just to keep the chart clean. And a few things that I was noticing. So first off is that we made a high right here around this level, right? So when I saw this break that high, I was immediately thinking, okay, that's an indication, right? So my idea was, okay, indication, correction, and then somewhere right here, continuation to the upside. Now that didn't happen. I actually recorded all of my trades on, this day, which was Tuesday. I didn't trade, that was the last day I traded last week. Okay, so and like I said, I won this trade, but I didn't win it like this. I won it on a downplay. And you're gonna see that what I won was this. I won this indication, correction, continuation. That's what I won, right? And then I got out right here. And as you see, the market pulled back and went higher. Now, I had some hesitations. Initially, I thought I was on point because look, you got the lows here were getting higher, right? So these were lows, but this was a higher low. This low was higher than the one to the left. Then we got another higher low. So I'm immediately thinking, okay, we want to push up. And then we had this indication right here that broke this level. Yeah, okay, that was great. So it came down here. I was looking to get in here. And then, like I said, to have that be the trade. But ultimately, what happened was the indication was valid. The correction came down to here. And then here is where we had the continuation all the way up, right? And if I were to advance it a little bit more to the right, a couple more candles, you see that the wick came all the way to the top. And then, there's another candle there. But regardless of this candle, this wick went all the way to the top of the range. Okay. So that's one thing to note. So this was the indication, correction, continuation. So what I saw was valid, but the way I attempted to take it was not. And while I was doing it, I had to figure out real quick in real time, hey, do I need to get out? Right. And I did. I ended up taking the trade twice. So let me show you what I did. Now, like I said, I recorded everything, but it was a 45-minute video. And I don't think the video will perform well if I make it 45 minutes. So I'm breaking down kind of some of the things that I saw. I had some mistakes, and you can compare them to maybe what you saw on Tuesday or just trading in general, right? So keep in mind, this is gold for those of you that aren't trading ICC. All right, so right here, mistake number one, but it wasn't a big mistake because we got in, then our rules prevented us from losing and told us to get out, right? So the market pushed up. I'm just going to skip through these. I could do this. All right, so market pushed up for the indication. Then for the correction, it started coming down. Now, this candle right here came all the way down to this level. right? We're on the 15-minute, we're not on the 1 hour. We operate on the 1 hour, we execute on the 15 or the 5-minute, right? So I wouldn't have seen this is the 15-minute. It would have looked different. It would have been a bigger candle just going down to the bottom. But as it was correcting coming down, that's where I was like, all right, let me jump down to the 15-minute and get ready, right? So as price came down, I saw it tap this bottom and then come back up. Now, to note, it's 7:15. The market opened at 6:30 my time. I'm PST, right? I'm Pacific. So I'm thinking, okay, did I miss the move or what? I did not like the entry because it was, first of all, it wasn't a reversal, right? When the market is coming down, what we want to see is we want to see we wanna see that downtrend end. So we wanna see it, let's say this is the level here. So let's say it bounces off this level and it does something like this. We wanna see a higher low and then a higher high, right? So this low is higher than this one, so that's our higher low, and then this high would be higher than this one. That would be our indications to get in, and this level right here would be considered a break of structure, and that means that the market is just reversing, right? So then it would do something like that and then go up, and I would get in somewhere around here, something like that. My stop loss would be right up against the zone, and I would target the top. That's how it would be. But that didn't happen. So what actually happened was I ended up getting in at two places. First right here, then I got out, and then right here. And I'll explain why. So first off, when price was coming down, sometimes when it starts to reverse, sometimes you can't see it as early as you need to on the 15-minute. Now, the the smaller time frames, the 1 minute, the 5-minute, that's where trends start and they just grow. And then on the 5 and the 15, if the trend, let's say if the trend happens and it's moving up, right? And it continues to move up, then you're going to see it on the 5-minute. If it continues to move up, you're going to see it on the 15-minute, so on and so forth, all the way to the 1 hour and the higher time frames. So but the problem is you can't just go on the 1 minute and the 5-minute and catch everything you see, because the 1 minute will go trend up, then it'll break, then it'll trend down, then it'll break, then it'll trend up, then it'll break. So you don't really get an accurate knowing of, are we going up or are we going down overall, right? So that's where the higher time frame comes into play. The higher time frame shows you where the overall weight of the market is. So if I go to the 1 hour and the 4 hour, in this case for gold, you can see that overall bulls have been pushing the market up. Right here, you can see that the bears have been pushing it back down. You can see that there's some consolidation here. You can see, so it's letting you know the overall weight of the market, right? So that'll let you know odds wise, we're going up. Odds wise, we're going down, whatever that is, right? And you want to be on the side of the higher time frame, whatever the odds are. Okay. That's my general rule of thumb. I think that's pretty much everyone's general rule of thumb when it comes to trading, right? So that's where they say the trend is your friend. Okay, so now once again, in order to get a nice entry, you got to go down to the lower time frame. So it's a balance between the 5 and the 15, because the 15-minute, if it shows up on the 15-minute that we're moving up, I feel like that's more reliable than it showing up on the 5-minute, because the 5-minute can reverse. And that's kind of what did happen. So if I go to the 5-minute here, and I went to the 5-minute because I didn't want to lose out on a good entry, because I'm trading such a small account right now. It's a 50K account, but I was up maybe $200 from the prior week, and I didn't want to like lose $100, because then I just lost half of my account that I just earned, right? The week prior. So so I wanted to make sure that I take a sniper entry, and I had to risk a little bit, meaning that not the money amount, but I had to like take a risk and be like, okay, this is where it's going to happen, right? But I was okay with that. All right. So here's where the first entry happened. And like I said, I have this recorded so we can see the recording. I just didn't want it to be too drawn out, but I'll show it for proof. And I'm recording so you can see on TradingView the dollar amount and all that good stuff. So right here, price comes down, right? Price actually comes down all the way here, but we're going to use the 15-minute. Comes up, comes down. So this is how it looks on the 15-minute. All right. Now let's go to the 5-minute. Okay, here on the 5-minute, you're gonna see it looks a little different. All right. So the 15-minute, let's go ahead and give that a different color. Let's give that maybe a blue color. Okay. And I'll make it just a little darker so we can see it. Okay. So now for the 5-minute, we're gonna do another one. All right, so we're gonna do this one. It's blue right now. Let me change this to black so we can see it. Okay, cool. All right. All right. So for the 5 minute, I'm gonna I'm tracing the lows and then the highs, the lows, the highs, the lows, right? So I'm gonna do it really fast. So that way we can just take a look and see what we actually have here. All right. So I'm gonna just move this 15-minute to the side down here. Okay, so price was coming down here. And this is where I was waiting for a reversal. This is where I saw the reversal right here. So price comes up, comes down, creates a higher low, and then breaks that higher low. So this level right here was what I call the 5 minute break of structure. Right. So I'll do BOS and we'll just put 5M. So we know there's a 5 minute break of structure right here. At this point, I got in. I got in right here. I did not like my entry because the stop loss, look at the stop loss. It's kinda wide. I try to get it a little smaller. If you look at the ratio between where we're going, that's a 1.41 risk to reward, right? So that means that if I risk $100, I'll make $141. I usually wanna get at least a 2, okay? And that's in case if we lose, so that way we're still up ahead on the account. Alright, so I didn't like that at all. So that was a bad feeling. That was not an A plus, didn't feel like an A plus trade right there, right? So then price comes up. I'm up $45 or whatever, right? Right around here. And then I end up getting out here. Why? And you're going to see it in the recording because this was the last high, right? So if we look on the 15-minute, let me bring that 15-minute back. Okay, we look on the 15-minute. So if we look on the 15-minute, let me raise this up a little. I guess that's where it's supposed to be on the 15. Let's leave it. Okay. So if we look on the 15-minute, the 15-minute high is up here. And there's the last pivot point, right? So let me move this to the side a little bit. So you can see we've got a dot there and a dot there, right? Those are the pivot points. So there's nothing in between. All right. So on the 15-minute right away. All right. So on the 15-minute, I'm going to just hide everything. So on the 15-minute, you can see that up here was a point, it was a high, then we had a low, then we had another high. So meaning that when we started pushing up, the odds of it pushing from here to here are probably slim to none. More than likely, I would get a red candle and then another green candle, and that would be the 15-minute break of structure, right? But we didn't get that. We got a red candle, and then we got another red candle. So it never came back up. And on the 5-minute, you can see it kind of clearly. So I'm just going to get rid of this 15-minute. We don't need that anymore. So look, on the 5-minute, you can see that this was the break of structure on the 5-minute, right? We had a break of structure here, but I really wanted to see it break this level too. And that's why I had this like smaller zone here. So I wanted to see the candles get above here, then pull back. So what I wanted to see was something like this and then down and then up, right? But like I said, overall from the beginning, it didn't really feel right. It didn't do that and it started moving down. And that's where I have these green highlights here. Those are indicating that those are all the highs. And if you notice, the highs are getting lower. So once I saw that this created a lower high, that's when I got out. So I moved my stops to break even and then just got out there. I was clean. And that's what I mean by if you have a system and you're watching the market and you're seeing what the market is presenting to you, you can make the right decision and kind of flow with the market. So in this case, I was wrong and I got out on time, right? I could have been right had this have maybe stopped right here and then moved up, then I could have been right. Then that would have been a play. But that's not when this setup was ready to go. Okay. So that's the deal with that. So then what happened next? Then price comes down, comes back up. And I'm thinking, you know what? We've got a little space here. I didn't like my entry. Remember, I didn't like that entry. So maybe this is the correct entry somewhere right around here, right? I got a nice tight stop loss like that. And then I can target this. Oh, now we're getting 1 to 6. Let me open it up 1 to 4, something like that, right? So that looks better. That looks more like an A plus trade. But then as I was looking at this, the way these lower highs were forming, that's not typical. I don't really see that too much when I'm getting the trade. I see more of a push down, a faster push down on the correction. The pullback usually is fast, not necessarily all the time, but this didn't look good to me. All right. So price comes down, I get back in. Now, at this case, we're on the 5-minute rate. And look at this. There is no break of structure. Okay, I'm gonna trace this just with the arrow, just so you can see. All right, the arrow's coming down. We'll do this quickly. And you can see our at this point, we break above this level, right? But then what happens? Price comes down here, never breaks above this level again. It gets pushed down, right? So you can see, you can see that right here, we would have wanted to make something like this, right? Where the lows are getting higher. In this case, the low was still higher than this one, but the high didn't break, right? In this case, like I said, we had a high here, so that was the difference, right? Because right here we're downtrending. So we had lower lows and lower highs. Then all of a sudden we get a higher high. Okay, there's one. Now, then we get the higher low. Okay, there's the second one. Now we needed to continue. And what does it do? The market does not break above this level. Matter of fact, it breaks below, and then we have a lower high. All right. And then price just moves down from there. But that was my indicator. Once I saw that we had this lower high, I was like, I'm out. I'm out because it didn't make this extended move. We had our 2, 1, 2, but then we didn't get the third move to continue in the right direction. I saw the high here. We just need to break the high. That's as simple as possible. And we're saying that we made a low. And you have to analyze these things as the chart is unfolding, right? All right. So in this case, I got back out at a loss minus 19. You'll see that on the recording. Then we break down, right? So I'm going to go back to the 1 hour. Now, this is where maybe I made a mistake, but it still played out in my favor because the three phases of a trend, just the way the trends moves, are impulse, correction, continuation. And in this case, our trading strategy is called indication, correction, continuation. Indication is the impulse up, but we're calling it indication because that's where the market is letting us know, hey, I want to go this direction. Okay. So three phases of a trend are impulse, correction, continuation. That's just the reason why things work out the way they do. And if you were to go on the chart here and you were just to mark this up, and I want to do an exercise in another video where we do it, but you can see you got an impulse, correction, continuation, right? And then that continuation becomes another impulse. So the continuation can become an impulse. So we got impulse, correction, continuation, impulse, correction, continuation, impulse, correction, continuation, impulse, break of structure, reversal, impulse, correction, continuation, impulse, correction, continuation, impulse, correction, break of structure. Look, impulse, correction, continuation. You see what I'm saying? Like it happens all the time. I know that may be confusing to you at first, like it was for me. Don't worry about that. Just think of the concept. Oh yeah, it happens all the time. I see it. I get it. We're gonna work on another video of how you can replicate it and just sort of lock that concept in for you. But that is why I feel like I won because of the impulse correction continuation move. All right. So let me show you the actual trade that played out. So the trade that played out, and I made 300 or so, 300 $400 off this play. So price comes down, breaks this level. Now on the 1 hour, I would have wanted a break below this level for me to say on the 1 hour, right? On the 1 hour to be like, okay, yeah, we're moving to the downside. I get in here. Here's TP1, there's TP2, right? That's ICC, right? But since that didn't happen on the 1 hour, to be totally honest with you, I was in the 15-minute looking and I just saw it break this level. And from the 15-minute, for some reason, I kind of was thinking I was on the 1 hour, maybe because I was looking at it too long, right? And then you could see that, okay, boom, we broke this level here. That's our indication. Correction got in for the continuation on down, which it did happen right here. And that's where I made my money, right? Right there, up 310, 324. Where I want to get out. We could do the buy. Okay, so it took us out. So we're out the trade now. But let's go ahead and look on the 1 hour how that looks. On the 1 hour, it doesn't really look the same. Why? Because there's no real break of structure right here, right? Because if we look at this, I'm going to draw this out on the 1 hour. So right, we've got higher high, higher low, higher high, higher low, and we got a higher high. Then we've got still a higher low. This low is still higher. Now, if this low would have been below here, I think that would have been a good break. Or if we would have had some movement in here and then down, that would have been an ICC play to me. All right. But it wasn't. But like I said, I was on the 15-minute and maybe I got lucky, right? Maybe I got lucky because on the lower time frame, we still get an indication, correction, continuation, right, on the lower time frame, right? So if you look at this, right, you got an indication, correction, continuation, right? Let me use this other one here. So indication, correction, continuation, and then the continuation becomes the new indication, right? Because it broke this level. Indication, correction, correction, continuation, indication, correction, continuation. In this case, it went all the way down here, and then there was no indication. Then it just reversed back, and then we had an let me see, maybe an indication, correction, continuation, indication, correction, continuation, continuation, indication, correction, continuation. This level, uh, indication, correction, continuation up to here. Indication breaks this level, and then at that point, it's just whatever. Okay, so that's how the market moves. And back to the 5 minute here, you're going to see me take this trade. That's where the market pulls all the way down to this level right here. I wait for it to come back up. And then I end up, because I didn't want to wait for the 5 minute break of structure, which if we look at that would have been right here, like 5 minute break of structure, reversal. I'm saying reversal when I have to say 5 minute break of structure. All right. So you can see it's uptrending, right? You can see, high, higher lows, higher high, higher low, higher high, higher low. And then we have a lower high, right? And then right here, we have an equal low, and then we have another lower high, and then this is the move that goes down. So here's a clean break of structure is probably right here. So that means that I would have waited to get in right here, and then this would have been my risk right here, which would have been $110, $115. And then my target would have been right here, which would have been $136 or a little bit more than that, maybe $140 or so, $150, right? And I wanted to make a full trade. I wanted to make $250, $300, $400, right? So I ended up risking only $88 here because I just trusted the process of indication, correction, continuation, even though we're on the 15 minute and the 5 minute. Right, so that was my mistake because really the ICC on the 1 hour happened right here, right? We had a, indication comes up here, correction right here. This is where I would have gotten in and then continuation all the way up. And there's a ton of points you would have made, right? But, like I said, I don't trade after market closes, which is right here. Otherwise, I need a Forex account, and, I'm probably going to do that. But the account that I'm trading right now, the funded account is a futures funded account. So that means I have to get out there. Hey, thanks for watching this video. So far, we are up $637 on our prop firm. Let's see what happens this week. And I really appreciate it. Please don't forget to like and subscribe. Post a comment down below. I know many of you guys have questions. Post a question down below. If there's something that's off, if there's something that makes sense, if you want to encourage me, whatever, just post a comment. That definitely helps me. That helps the algorithm. These videos take forever to do, and I'm trying to do it to provide content and value for you guys, all for free. And I appreciate your time watching this video. All right, y'all. Peace.